Welcome to Trading Lounge and the US indices, and starting with the S&P here. Look, it's possible to have this running triangle pattern here where we have wave C here, D here, and E here, and being completed here, and we're looking for 5 waves up and 3 waves back, and then looking to move up higher from that point there. So I can't take that off the table just yet, okay? But we're following a count that would be more in line with Amazon. So if I can bring Amazon across for a moment, and we've been over this, but we'll go over it before again. And in this case here, we're looking at 1 and 2 and 3 and 4 and 5 here for wave A, then an A wave, a B wave, and 5 waves up for a C wave here. It is possible for this to turn into, the other alternative for this pattern here is to turn into a triangle pattern where we only get 3 waves up in this leg here, and this is what we're working through with the SP 500 as well. But we are seeing a nice strong third wave in the middle here, and we're seeing a strong third wave in the S&P as well. So it's probably likely that we're going to get the C wave rather than a triangle pattern here, but we just need to be mindful of the top of the third wave here. So we go 1 and 2 and 3 here, and 4, 3 here, because that wave C3 can be a wave C here, because each leg in a triangle pattern, A, B, C, D, and E here, all have 3 waves in them each. But let's go to the S&P and dive into that a little bit further. So, okay, so this is the S&P here. So this is the scenario. So we've got up here for wave A, 3 waves in for wave B here, and we can have 5 waves for wave C, which would be 1 and 2 in here. We can look at all of this in detail in a moment, but in a nutshell, 1 and 2 and 3 and 4 and 5 here for wave C of B here. Or if we're going to go into the triangle pattern here, let's just make these lines here a little bit definite, just to give us a bit of outside structure here. So look, basically a triangle pattern within this, and because we've got 3 here, we'd get 3 here, and that means that if we're going, this wave C here can be 5 waves or 3 waves, so it'll be 5 waves, and that will make wave B here. But if it's only in 3 waves here, if I just copy that and put that over here, so 1 and 2 and 3 here, that could be wave C there of wave C, and then we come down for another 3 waves in wave D, and then E as wave B, and then we go down from that point. So we don't really know, but it's looking like an impulse structure to the upside rather than a corrective. But I can't confirm that until the evidence falls into place. So a little bit unfortunate there, but still at the same time we know that we're going to be pushing a little bit higher here into the 28 area here. If it's going to be 5 waves, then we can actually go higher than this high here, so we need to be open to that. So let's go in and have a look at this little structure here. So on the hourly chart, first up, so there's a couple of things here. I just want to talk about the trading levels here. So with the trading levels between 700, say, and 800 here, we've got group 1, which is 1, 2, and 3, then the midpoint is 50, then group 2 here. So basically, if the midpoint finds support here, the 50, then we can look at group 2 here, the 65, 72, and 80 here, and this will become more apparent when we have a look at the tick chart in a moment. So this area here, we can expect corrective activity within this space here before pushing up into this space here. So the 2 sort of target areas really are the 72 here. We can also use the 80 as well. I always liked, I'm a bit of a scaredy cat, so I always like to use the 72, but the 80 should be fine. But we should see that correction within this space here, and long as it long as the 65 here doesn't become the retested resistance, then we'll be pushing up high from that point. But if the lower level of subgroup 2 here becomes the resistance, then we're going to be dropping down to the midpoint here, and then that's going to cause a breakage in that trend to the upside. So in terms of the trend to the upside here, it's interesting that the S&P made a new low here where the NASDAQ didn't. Okay, the NASDAQ finished on this low here, but we're calling this in as the low here. We have a clear 5-wave structure to this point here with an A and a B and a C wave here for wave 2, then wave 1 up here, wave 2 and 3. It's possible to put wave 5 here with wave 3 here, and having this as wave 4 here, and having wave 5 sitting just here as well, and having 1 and 2 and 3 and 4 and 5 pushing up into this space here. So just be mindful of that. I don't think it's the case. So I'm going to put this back up here, and this over to here a little bit further, and wave 4 over here. So let's just go to the tick chart and have a look at this in a moment. But yeah, so we can bring this, the target we want to go to is, I mean, taking some money off the table at 72 or 80 is fine, and the rest of it at the 8 here. Okay, because at that stage it's a bit of a guessing game of how high it can go. So we can really bring the stop under that particular low here if you're trading long at this stage. So I'll just put that there, and let's just go and I'll just save that. Just go into the tick chart here and pick this up. So let's just go back to the beginning here. So wave B, C and B here on this low here, and then we've got 1 and 2 and 3 and 4 and 5 here. So we've got an A wave here, B wave here, and a C wave on that little low just here, which leaves us going up for 1 here, back for 2 here, 3, 4 and 5 here that we can have for 1 here and 2 here. Nice strong third wave here. Like I said, we can put, I mean, wave 3 here, wave 4 here. I could put you know, from wave 4 here, I could put wave 5 here, as I mentioned before, and then have the green wave 3 here. But it does leave this as a little bit small here. So I'm thinking that we'll just leave wave 4 here, and wave 1 here, and ABC for wave 2 here. And then we've got the next degree smaller, we've got 1 and 2 and 3 and 4 and 5 here for 1. I think this is 2 here. When I pulled, this is 100 ticks here, but I pulled this apart on 20 ticks, and it does look like this is wave 2 here as an A and a B and a C, and then we're pushing up here. We've got wave 1 here and wave 2 here. So we're pushing up a little bit higher. So this is where we get to group 2 here. So group 2 is 65, 72 and 80. So I'm thinking this 5-wave structure here for wave 3, and then we'll see an A and a B and a C across here for wave 4. Then we'll see up for wave 5 of 3 here. But this is the tricky bit. This is where it can be the triangle pattern for wave C here. And this is where we need to be careful. So I'm just assuming that we should just trade to take part profit in here if you want to, but definitely you need to take some money off the table at 2.8 here. So we're using that as the target area there. So normally what happens across this level here, the normal thing would be that the market would, I can't draw here, but I just want to point out the trading levels concept here, because so when we're talking about this large number here, which is a minor level 8 here, then we have subgroup 1 above, which is 1, 2 and 3, and then we have the midpoint above that here at the 50. So this group 1 here, this would act as a resistance to hold the market to this number here. If number 3 here becomes support, tested support, it means that the market has left this number and will be moving up to the 5 at that time. It can trade above here and still not be a tested support, so be mindful about that. You need to understand what is tested support. What is support actually, what does it look like? But if we get support on 3 here, then we're up at 5. We know that if we get support on number 3 here, that the market's leaving this number here. But normally what we do is we look at group 1 above and then group 2 below here. So group 2 below will become resistance over here, and the price activity within here will act as support when the market comes back down through here. So really the market should stay within this space here between number 3 and the 65 here. It can go above the 3 and it can go below the 65 here, but as long as it doesn't find the 65 as the resistance. So this is the normal swing range for a correction, or correction at, it could be 2,700 here as well. So it's only if we get support on 3 that we go higher. And if we get the 65 as the resistance here, then we're going to come lower at that point. So yeah, it's kind of just good to know that and watch it for a while, and you won't notice it unless you put those lines on your chart as well. And then when you put the lines on the chart, then after a while you'll start to get used to what the levels are and how they work together, and how they work together with the wave count as well, because normally we would find that this is normally the waves I can draw on this side, wave 3 here, wave 4 here, and then wave 5 moving up higher here. And this is the same with most stocks as well, with most levels, so it's good to get your head around that. And it doesn't have to change the way that you trade at the moment. It can just be, a backdrop on your canvas, so to speak. Okay, enough rabbiting on. Let's go to the NASDAQ, and the same with the NASDAQ as well. In a nutshell, we're looking for 5 waves up into the 72 number here, and it can go a little bit higher. Once again from 7,000, which will obviously give some sort of resistance here and a corrective pattern, and then up into the 72 and maybe a little tad higher. And on the 1 hour chart, I think we're working on. So in this case here, I've brought the stop up to this level here, again here. So I'm thinking that we're going to be pushing up into the 7,000, and then we're going to get a correction back for wave 4 here, and then wave 5 to the upside here. So still further to go up. Our target here is the 7,000 here. So let's just it can go higher, but it's just put take profit there. And that's about it really. So all pretty sort of simple, and yeah, all good. Alrighty, cheers.